Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 28th of April. So let's have a quick look at the chart of gold because it is starting to look a little bit heavy following a consolidation in this short-term triangle pattern. It has created a few lower highs, as you can see by this bearish trend line, although so far it hasn't broken down. So let's see if the pressure will accelerate here or if support at 3,300 is going to hold firm. If the support level breaks down, then the next downside target below it is all the way at 3,250, marking the prior highs before gold broke above this consolidation zone. So that level now remains exposed for a potential test from above. Below that, we have this shaded area, which is a massive level of support now, because not only was it previously support and resistance, we also have the bullish trend line connecting the recent lows, converging there as well at 3,200. Now you might have noticed this orange squiggly line on the chart. Well, I drew that a couple of days ago, or several days ago now, and basically all it is that the move from point A to point B is the same as the move from point C to point D. And usually when you have such symmetry in price, you tend to see the market respond, especially if it converges around a Fibonacci level like the 61.8% in this case. We bounced from there and the bounce has been quite strong, but it has now lost momentum. So the key question is, has gold started to trend lower now that the US dollar is making a comeback? If you love watching paint dry, then look no further than the gray precious metal, because it has been consolidating in a very tight range without making any progress in either direction. Recently, it broke above this bearish trend line, but it has not moved significantly above it, instead holding steady at around 33 to 33.50 area, frustrating the bulls who must have expected a continuation towards the recent highs, especially with risk assets also rallying as well. However, that hasn't been the case yet, and so there is a risk that silver could potentially break down instead because of the lack of demand at around these levels. So if you go back below this broken trend line, that could put the bulls in a spot of bother, and in that case we could see it dip down to 32, possibly even below that, with 30 being the most important support zone to watch in the medium term outlook. Longer term, we have a massive trend line to keep an eye on, a trend line that has been in place since September of 2022, and that comes in at around 25 to 26.50 area, which I've shaded in blue on the chart. For me, that's a massive area of support, but that's miles away from where we are at the moment. However, if we do get there in the coming weeks or months, we could possibly see silver stage its next upward move from there. But we'll cross that bridge if and when we get there. For now, the key level to watch is at the 33 area, and if that breaks, then we could well see some short-term weakness in silver prices. On the upside, if support holds here, then 34 is the first level to watch. Above that, we have the March high coming in at 34.59, and then the October 2024 high thereafter at 34.87. But if it got to these levels, then surely silver will catch up with gold in terms of how much the yellow precious metal has rallied over the years, and we could well see a big rally in silver. I am long-term bullish on silver, but the recent price action is making me doubt that we'll see significant gains in the short-term outlook. But long-term, we could potentially see silver rally past 35 and towards the $40 level. Now, for more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.